Thanks for joining me for another video. Today I want to talk about why I think your investment property may no longer be the asset that it used to be now that we have rents falling and prices falling in many markets around the country, as well as skyrocketing expenses for investment property owners. And towards the end of the video, I am going to share with you the most compelling reason why I think many investment property owners should actually sell now. You're not going to want to miss it, so definitely stick around till the end. Now, I know this may be a controversial topic for a lot of you, and I definitely want you to share your thoughts on the matter in the comments down below, but please be friendly. I also want to say that if you bought your property a long time ago and have a lot of cash flow or have severe tax consequences if you sell, then some of the stuff I'm going to say today may have slightly different implications. But even for people that are in that situation, I will share with you towards the end why I even think for you, it is a good time to actually sell. Now, the first reason why a lot of rental properties are turning into liabilities instead of assets are because one, prices are falling in many areas. Two, rents are falling. And on top of that, the cost of owning and managing these properties is going up stratospherically for a variety of different reasons, which I'll talk about. For instance, you've probably heard about what's going on in the Airbnb space, where a lot of these properties are now upside down. A lot of these owners bought those properties at really high prices or with high interest rates, and they were banking on these continued high occupancy level and high rental rates. And now that that stuff's evaporating, a lot of them are negative cash flow and upside down, and they're starting to exit in droves in many rental markets across the country. Landlords are also seeing massive inflation across the board for things such as insurance, maintenance, repairs, newly required retrofitting that the government is requiring them to make, and so on. And on top of that, rents have been falling in many areas, and of course, wages have not been keeping up with the inflation that we've been seeing in the economy. So I'm not seeing a lot of landlords in a position to pass on a lot of these additional costs that they're experiencing to tenants as a result of that. And this is really destroying their cash flows on the investment. I actually see this every day, and I've been experiencing this myself. And also, a lot of areas that have rent control laws are not allowing landlords to recuperate the costs that they're experiencing from rising inflation or the things that I just shared. And of course, landlords can't just raise rents in a vacuum. And what I mean by that is that if you raise the rents too quickly, you're likely to have more tenants move out and more vacancies, which obviously hurts your cash flow. Or worse, you could have tenants stop paying, and you could have very costly long-term expenses as you try to evict a tenant, depending on where you're located. And I don't see these trends reversing anytime soon. In fact, I think they're more likely to continue to accelerate, which is going to make it harder and harder on many landlords that are just barely scraping by in the green right now. The next issue is that many landlords who actually bought properties in the last couple years at the high prices and the high interest rates are already upside down right now. Or if they bought a multi-unit property with 5 or more units, the financing on those properties only lasts for 3 years or 5 years or 7 years. And so that has to be refinanced. And when that happens, the rates are dramatically higher than they were over the last several years. And so that is going to put many landlords in negative cash flow territory when they actually go to start refinancing these properties. And so the reality is that most tenant occupied properties just don't make sense from a financing standpoint right now. In fact, in Southern California, where I'm a real estate broker, you would be hard pressed to find any property that's tenant occupied right now, where if you put 25% down, the numbers would actually make sense financially. So this situation is likely to continue to deteriorate if interest rates stay high, and properties are going to start losing more and more value in the short term, maybe even the midterm, depending on how things end up unfolding. The next reason why I'm seeing properties that traditionally would have been assets turn into liabilities is because more and more states are basically shifting property rights from landlords and owners to tenants, or imposing additional requirements or restrictions on property owners for their investment property. So being in California, I never could have envisioned the types of laws and changes that we've seen over the last several years in terms of property rights. And what's happened is that there's been a massive burden, financial burden, placed on the landlords where they've been in a position to eat a lot of costs and expenses over several years that in many cases they weren't able to recover. And it's likely that these things are going to continue, and more states are jumping on board and doing very similar things to the things that California has been doing. And this trend is almost certainly going to continue. And as it does, it is going to push prices of property down because the cash flow and the return on these properties is falling as a result of all these regulations. Additionally, governments are starting to require extremely costly retrofitting to properties. For instance, California recently passed a law requiring all balconies for properties that have 3 or more units, including HOAs or large complexes, where the balcony needs to be inspected and repairs need to be made if anything's found in that inspection. And I actually had a client who just went through this and had to spend $50,000 repairing a balcony, which was about 2 years of the positive cash flow on the property. So just like that, in one fell swoop, from one new regulation, there's zero cash flow for 2 years as a result of the expense of that one thing. And many smaller mom and pop investors really rely on the income that their investment properties generate. And so the more red tape and rules and laws that get rolled out like this that have a huge cost behind them, the more that it's going to eat into any potential cash flow that they could have earned, and the more it's going to push the value of these properties down, because new investors that might want to buy it are going to have to factor in all of these expected and unanticipated costs if they're going to buy the property for it to actually make sense for them as an investment financially. And real quick, before I share the main reason why I think now is a good time to sell for most investment property owners, if you need help with real estate or you have a property that you're going to need to sell here in SoCal, reach out to me. I can help you. Or if you need a referral to a great agent anywhere else in the country, let me know on that as well. All right, the last thought I want to share with you about why it's probably a good time for many investors to sell their rental property is the concept of opportunity cost. And opportunity cost is really just the idea that if you decide to invest in asset A, you're forsaking the return or the benefit that you could have had if you instead had invested in asset B. And this is often the biggest mistake investors make, and it's also the most often ignored. And let me say, this is not investment advice, but if you hold an asset that's generating a very low return when you could have invested that money elsewhere and got a much higher return, over a long period of time, that is going to lead to a lot of wealth destruction. And it's really just a poor investment decision. And what I really mean by this is that because of the really high prices that exist for investment property right now, the actual returns that you generate on that high price after all your expenses and all the considerations are remarkably low. And that made sense for a long time because interest rates in general were low and returns on many assets were also very low. So it was hard to find anything that made sense where you could have a pretty high likelihood of having a higher return. But of course, that's changed now, and there's all kinds of investment opportunities out there that generate vastly higher returns than rental real estate at the current high prices. For instance, in my area, properties are still being priced with cap rates as low as 3 or 4%, when interest rates are north of 7%, and this obviously makes very little sense. And that means that prices are going to have to fall if interest rates remain high because investors just can't afford to buy the properties. So for instance, let's even say you have $1 million property that's totally paid off, and after all of your expenses on it, you're only netting $35,000 a year. Well, today, there's all kinds of dividend yield investments that are at 6%, even 8%, and in some cases as high as 10%. So the main point of what I'm trying to say here is if you own a property and you're only netting after all your costs and expenses 3.5%, let's say, and you're going to face all these headwinds, prices falling rents, rising costs for everything you need to put into the property, more and more stress and headaches from owning it, and instead you can invest in assets that yield 2 times or 3 times as much with zero stress and zero management hassle, do you really have an asset or is it becoming a liability? Let me know what you guys think in the comments down below. Again, if I can help you with any real estate needs here in SoCal, feel free to reach out. Don't forget to like, share, and subscribe. I appreciate you guys watching, and I'll see you next time.